It's coming up on 8:35, Brianna, and we're going to bring in one of our favorite guests, and that's Fari Hamzei. He's founder of Hamzei Analytics. He joins the show every Wednesday, bringing his wealth of knowledge on aggressive equity options and futures trading. What is he going to say? Is he going to say watch, Commander? What's he going to say today?
Let's find out.
Good morning.
Oh, he totally fooled us. No watch, Commander. No military talk. Just flat out good morning. You totally took us.
It's a patience day. We have to be patient, please. Auntie is going to speak and entertain us.
Is Auntie Jeanette going to give the market a gift, or is Auntie Jeanette going to take away the patience of the market?
We don't know. That's suspense that we're in. The market always creates. This is the division on the Madison Avenue. It creates that suspense, and that's how the brokers survive. That extra trading.
How are you playing it ahead of this Fed announcement here at 2 o'clock, Fari?
Most likely, I'll just be. Well, first of all, I'm taking off tomorrow for a couple of days to the West Coast. So
you
today
go on
would be.
vacations? I didn't know you vacation.
It's Persian New Year on Friday. It's spring, so I got to be in Los So I'll be in LA. But here, I just visit family. I'll be back quickly over the weekend. Here's what's going on. I won't call it a vacation. But here's what I will be doing. Most likely, sit on my hands, take care of some administrative stuff. Just see, it's going to be quiet until most likely, actually, the press conference. I mean, I don't even see much action that's sustainable at 1 o'clock Chicago time. When the communique comes out with, and then the economic forecasts or projections. As before, if history is any guide, the tradable time is when she speaks. The trick is this is a 2-day event with a press conference. You really have to be on your toes and treat each question as a trade, because the next question, depending who's asking it and how they're pushing it, and how she answers, could reverse the whatever direction we were in, or momentum. So you cannot sit there and say, okay, I'm going to be long or I'm going to be short. There'll be some gyrations in between from question to question to question. So we have learned just to be very fast. The moment she's done with the question, make a decision. I'm going to go flat here or not, and most likely we do wait for the next question.
So you try and trade question for question there, huh? I kind of like to just observe all the action and then just kind of wait, kind of stick with my levels and see if we get to one extreme or another, because you're really competing with some big boys if you're going question for question. I mean, it's not. I mean, but in the bottom of your heart, I mean, do you see a strong case for interest rates going up?
Yeah, of course, slightly. Of course,
that's the keyword, slightly.
Slightly. The impact is not what the Fed used to do before. I mean, that's what we're forgetting. This is a different new normal. First of all, the base is very low, 0.10. What's the IRX right now? I thought I saw 0.10. I mean, it's just nothing. First of all, IRX is 0.48 right now. Okay, that's a discount rate for the 91-day T-bill. Okay, 0.48, and then. The base is very low. If they do anything, it's Hollywood, just for a show. Move it 25%, 0.25 or 0.5. It doesn't make the impact it used to in the interest expense column. Okay, so
interest rates.
Now with other 1 second, with other central banks. Figuring out, hey, they got to be doing QEs. Already, the case, the dollars are stronger. You see my point? So maybe they don't really need to do much. That's why this is uncertainty. It's not clear. I'm not sure the impact will be that much either. I think it just gives some players a chance to trade.
Okay. Sorry, but and you say they could go up slightly here, but interest rates, I don't see interest rates ever going up significantly here, at least, on the U.S. perspective, because how can they with their debt load? Like I've argued this for a long time. I think interest rates are low forever. like at a low level compared to where they have been historically forever. I don't see interest rates going back to 6, 7, 10% here because the U.S. government can't service the interest payments on their debt if they went that high.
You're preaching to a choir, Sailor. I've said this in March 7, 2009. It's on a webinar in a format that's not editable. I said, we're going to sit here on these interest rates. What I didn't count on, okay, was that in the 6 years that Obama has been in power, we're going to increase our national debt by 80%. He came in at 10. I understand George W. didn't keep everything on the books, certain expenses like the Iraq War, but he came in at 10 trillion. Now we're at 18.
Yeah.
And that rate itself is not sustainable, and nobody can finance it. I mean, as I posted on New Year's Eve from Jeffrey Gunlock over at Double Line, he said even China doesn't have the demographics to come and buy our debt, our paper. So there are going to be some changes coming up. I think it's very demographic driven, and we have to keep an eye on it. In terms of can we predict it, I'm not sure we have any prior correlations in place because the base is so different, both the debt amount and interest rate. It's anybody's guess.
Fari, let's move on to some individual issues here. And you have the lockup expiry in Alibaba. I've been trading in really an 80 to 85 range here. Little bop to 86 here. Do you put much stock into these lockups? I mean, it doesn't really mean anybody's really going to sell anything.
No, but when will it go free? Now? Today?
Yeah, today's the
this
day.
Week? Okay.
Yep.
Today's the day. Okay. I mean, I read a blip part that it was coming up. I didn't know when I made those comments before last week when you asked me. In case of GoPro, it did. Remember? There was in case of FB, it did. It should to some extent because now some large traders, large players, if should they decide, they can cash it out. So you would get pressure down. The problem is that also the market is down. And this has been doing not too bad. It came up day before yesterday, a couple of Sigma channels, and then yesterday was pretty much retained or held on to zero sig. The CI, the one that gives us the direction of the momentum, is beginning to lift slightly. But let's see how the trades are today. I mean, today's what, down 1%? Yeah.
Right.
Remember, it has given up quite a bit. We were at 115, correct? 119. I'm sorry, 119 at 2 sigma on the 10th of November, and we've been one direction since then, just slowly drifting down, and been playing between -2 to about zero sig. A couple of times popped over that and then sold again. And then, of course, there was a surprise at earnings in late January. And that really did a huge damage. It has not been able to regain that. So I don't have run put call on it, so I can't read the sentiment from an option standpoint. But the chart-wise, it's the daily is beginning to get some possible traction to the upside. But on the weekly, we're still on a sell. If you step back, weekly the talks dictates because it's a longer time frame, is still on a sell. It's still in a -1, -2 channel. So the downward pressure still exists on the stock.
Where would it take to go before you would get bullish this stock? Where would you want to see this stock go before you'd become a believer there, Fari?
The flush, well, I would look at for volume. The volume should be high on the flush to confirm that, but I can give you a price for the flush.
If there is a flush.
If there's one, exactly. About 65.
Whoa,
So,
that's Dennis.
that would put some people under some water.
yeah. I mean, the 65 is it at least has to trade below 76. Okay, at least, and see if it could somewhere between 76 and 65 catch a big volume day. Okay, so which that's your flush. I don't see you're going to see any big volume until 76 is breached.
What about buying it on?
That's
What about buying it on strength? Let's say this $80 level holds. Would you buy it in the strength? Would it be a point 85, 86, where you 7? Where you would say it's got enough momentum going to the upside.
if you're just looking at a daily, you're looking at a several-day play as a swing trade. And again, this is not Fari Hamzei buying it. I'm saying if you like to buy. For Baba, because of it's Chinese, I question their accounting. Probably won't touch it. There will be other better opportunities. But let's say you had to buy Baba. I would just buy some with call options, call spreads. I would not buy the cash. Just don't risk that much. Put some call spread, a long call, lower strike, and then short, high strike above to get rid of some vol and get rid of some theta. So you buy yourself some time, if you will, and your outlay is small. And if it moves, fine, you have a leverage. If it doesn't, it's a defined risk. You know what you're losing, sure, which is the premium paid for the spread. Now, in terms of what a strike you want to look at, again, if you play now, you have to be nimble. You have to have your exit time in mind because, there's a push up here, okay? But it's still not done until it goes down, try to 76, right? So as long as this move up continues, you have several days, maybe a week or two to play. Thus, you pick higher strikes now so that they have a better delta, right? If you want to wait for the 76 rooster to come home, that is a different lower strike range in your spread. But here's the problem. Your delta will be very low. So this is not the time to get into that yet. And you're going to lose some when it moves down. So you need to wait for that time period to arrive, the price and volume. Then you jump in at the lower spread. Right now the spreads that you at the monies would be around 85, and maybe you want to play 85 and 90s. 90 is a 3 sigma right now plus.
Fari, let's move on here and talk Apple, because finally Apple had a good day here. We know Apple's been relatively underperforming the market here ever really since the iWatch event. And now all of a sudden Apple breaks out yesterday and has a pretty solid trading day, pulling back a little bit slightly here in the pre-market, but actually still performing quite well, considering we're down 6 or 7 handles on the S&P futures. What are your thoughts here on Apple, and what are the Sigmas saying on Apple?
Well, Reg FD, we have a call spread on, which are April. We've talked about it before, in the 130 area. So that's not, we're not at the money yet. It's underperforming. 127 plus is zero sigma. While we're trading slightly below that. Let's see. I'll give you exact. Today zero sigma is 127.67. We need to acquire that and hold it. A close above that immediately would be very helpful for momentum standpoint. The CIs are beginning to snap up. Okay, in terms of the speed, the slope, and the color, and I think and the 2 sigma is about 133 area. So I do want to see a 128, 129 close immediately, okay, to get more comfortable. Otherwise, I'm just going to get rid of the spread. Why? The theta hasn't impacted me yet. Okay, if I hold on to it, the theta will. Maybe I should wait later on and get into Mays. You see my point? Drop these, roll them into Mays. If I don't see a confirmation here over close above 128-ish area, and then I'll be very happy if I see 130 and a half. 130 and a half puts us in a bullish channel, which is plus 1 sigma. See, right now it's in DMZ, demilitarized zone. It can flip back and forth. Yes, momentum is coming in, but it hasn't gained much given the drop it has from which was all-time high back in, what was it, the 23rd?
Yeah, 133.
133.
Yeah. Fari, let's get your take.
Let's
get your take on crude oil. You've been pretty good making the calls and that. Made a new multi-year low today at 42.05, just trading above that level. Still the supply gushing into Cushing, Oklahoma. You mentioned that quite some time back. I mean, are you getting a little afraid that, since everybody and their brother is talking about too much supply, it might be time for a little counter trend rally, or you still got your foot on the sell button or your foot on the pedal?
Well, I haven't researched that, but this is what I would do. But this is what. Let me show you what I would do. I would look at what the uh, activity over put open interest are. And that's where I would start. If the open interest puts are heavy, like it was, I guess it was in January, for the expiration for the February contract, or maybe it was December for the January contract, because as you know, the commodities move one month in advance. If that activity is heavy, then you have a reversal. If it's not heavy, then the drip down continues from a trading standpoint. From the follow the money concept. But from a fundamental standpoint, if there's a deal with Iran, given that they've had sanctions for years and years and years, there's been talk out there that at least the systems are working, but they just can't sell. They just only withdrawing from the ground for local consumption. But they would want to get to some hard cash. Going that route, if there is a deal, then this would put more additional downward pressure on it. Also, there's activity out there. Here's the issue. Also, if you look at some of the rig activity, and there have been some comments from some certain CEOs of certain exploration companies, what they're doing is they are drilling. Okay, remember we're running out of storage. They are drilling, but they're capping the well. They're not putting it into the pipelines and shipping it to Cushing, Oklahoma. In effect, that they're using the well itself as the tank. Okay, having it ready in case the demand comes in to bring it online, if you will. Okay, so there's the drill count or the rig count itself. I think some people have to modify that from a fundamental standpoint because there's a behavior change, and also in the fracking area, that also saves you quite a bit of capex. So there's a lot more to it than what people are talking about, and you gotta have a better handle on it. I don't trade crude. I just been watching it from a standpoint of it's the largest commodity by dollar value. So that was a macro call, and I think we were lucky more than anything else. But I would say chart-wise, as you all have looked at things, stocks before, for example, lower support once it's broken becomes a new resistance. There's a good chance we could be down here at these prices for a long time in terms of going back and forth, but we may not be able to get back up 60 for a long time. So, especially with the success that in terms of exploration and development the U.S. Properties have. So it's changing the world. It's changing the P&L overseas. It's changing definitely what's happening in the Middle East and also in Russia.
In Russia, there. Great point. We've been on the line with Fari Hamzei of Hamzei Analytics. He joins us every Wednesday, bringing his wealth of knowledge on aggressive equity options and index futures trading. Thanks a lot, Fari. Be patient today, and we'll check in with you next week.
Thank you, guys. Always a pleasure.
Thanks,
Bye-bye.
Fari.